So is this a sell on the news event or not?
I think a lot of people have been saying that it probably will be a sell on the news event, but so many people are saying that now that I'm beginning to have doubts. We are seeing an anticipatory move, but you know, the move of institutions into this new asset class, and that is what we are talking about here, a new asset class, which with another diversifier, institutions can increase their returns per unit of risk because of the low correlations. I think that's going to be very appealing. And if institutions with trillions of dollars under management just put 0.2 or 0.5% in, that could really move the needle. So we think the move has been anticipatory, and it makes sense.
Cathie Wood, the founder, CEO, and CIO of ARK Invest, has been a strong advocate for Bitcoin and cryptocurrencies since her firm first invested in the digital asset approximately 8 years ago. ARK Invest made history by becoming the first US ETF to invest in Bitcoin back in 2015 when the cryptocurrency was trading below $300. Wood has maintained her bullish stance, predicting that Bitcoin could reach at least $600,000 by 2030. In recent months, her optimism has grown, especially with the increased receptiveness of the U.S. Securities and Exchange Commission towards the approval of a spot Bitcoin ETF. Wood sees the potential approval of a spot Bitcoin ETF as an extraordinary event that could rapidly propel Bitcoin prices to new all-time highs and bring them closer to her 2030 prediction. In a recent CNBC interview, she expressed confidence in the likelihood of SEC approvals and discussed how these ETFs could encourage significant institutional investment in Bitcoin over the coming months and years. Wood notes a notable shift in the SEC's approach, transitioning from years of silence and unexplained denials to actively engaging with detailed questions and seeking revisions from ETF applicants. She believes that the forthcoming approval will not result in a sell the news event, and institutional inflows into Bitcoin are expected to be substantial over the next few years.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
It makes sense. There's a scarcity value now evolving. It's becoming a scarce asset at 19.5 million Bitcoin outstanding. It can only go to 21, and 15 million of those 19.5 million are in what we would call strong hands. They haven't moved their Bitcoin in the last 155 days. Yeah, I'll give props to 21 Shares, where they have launched 40 different products, actually now 45 with the new funds here in the US, and are enjoying economies of scale that we think this spot Bitcoin ETF is only going to increase. And so this is going to enable us to serve institutions. And we do think that institutions are missing this asset class. It's been evolving for the past 10 plus years. And they've had a lot of time to study it. We've certainly put research out there. 21 Shares has, all of us have. And I do believe, and stay tuned for our big ideas, but this idea that it is a new asset class will come clearly through as you see the correlation of Bitcoin to other asset classes out there. If you think about the internet early 1990s, what happened? The developers did not build in anything to enable financial services because they never thought it would be possible. This is simply completing that. And we think that the efficiencies coming out of building that layer into the internet are going to be profound. We are not looking to maximize profitability with the spot ETF. We will do that more so with our actively managed ETFs, but we really believe this is an important moment to help with the democratization of Bitcoin access, giving more people access. So that's our primary motive, to charge 25 basis points. And for the first $1 billion or first 6 months, free access. So originally we were just putting in there a marker. We didn't know what how the industry was going to fall out. But as we were evolving our thinking, we were saying, wait a minute, this is a special moment to make a statement that this is a public good, effectively, the equivalent of a financial superhighway, a global monetary system, a technology, as Ophelia was saying. And we just wanted to make sure that one of the things we communicated is we want you to feel like you can access this. So free for the first 6 months or $1 billion in AUM.
In one of her interviews, Cathie elaborated on Bitcoin's role as digital gold, asserting its potential to capture a significant portion of gold's trillion-dollar market cap. She foresaw Bitcoin's continuous upward trajectory, surpassing its current $900 billion valuation and reaching new all-time highs before the end of the cycle. Cathie, confident in the prospect of increased institutional participation, anticipated substantial price growth. During the interview, she emphasized that even a modest institutional allocation of 2.5% to 5%, which she believes is a realistic target, could drive significant positive momentum. This, according to her, might be a pivotal factor propelling Bitcoin's ascent. In the same discussion, Cathie expressed certainty regarding heightened institutional flows and their influential role in driving Bitcoin prices upwards. She envisioned potential institutional allocations starting at 0.5% and gradually increasing to 1%, foreseeing this gradual shift as a significant driver for Bitcoin's upward movement. The interview also featured insights from Ophelia Snyder, co-founder of 21 Shares, who shared valuable information about her firm and ARK Invest's spot Bitcoin ETF, highlighting distinctions that make such a product unique. Additional clips from the interview further delve into these insightful discussions.
Is a spot Bitcoin ETF more likely to broaden the institutional participation?
The short answer is yes. These are wrappers people understand. They're used to them. They fit within their existing infrastructure. And I think that's a really important piece. I think futures product, well, they certainly have a place in the market, have typically been viewed as more complex in some respects. And so I think there's been a little bit more hesitancy there. These are a bit more plain vanilla, or at least just as plain vanilla as they can get while still being in crypto. And I think that makes this a little bit easier. I think it also removes, assuming these things do move forward and get approved, it removes some of the regulatory uncertainty around these products. Because at the end of the day, the role of advisors is to manage their clients' money and provide them with access to high quality product. And I think, taking some of that regulatory uncertainty out of the mix can certainly improve accessibility.
For a lot of our clients, they have to now do a little more due diligence as these ETFs come out and they see the S1s and so forth. So we think it's going to be there'll be a nice push early on and then a good, nice institutional build.
One of the things that is going to end up being incredibly important in the coming weeks and months as people start to actually do diligence on these products and try to begin adding them to portfolios and hopefully live up to these expectations around AUM. It's going to end up coming down to how well built are these products, how well structured are these products, can they actually hold up to this? We've been running products like these for about 5 years. They are a little different in a bunch of different ways. Safety, security, operational infrastructure, it just fundamentally looks different. And I think one of the things that's going to be very interesting over the coming weeks and months is how that ends up translating with these audiences and with investors as they begin to actually come into this space for the first time and really understand the full range of that complexity.
In other Bitcoin-related updates, the anonymous Bitcoin analyst, Plan B, remains steadfast in his $532,000 price forecast for Bitcoin. During the previous cycle, Plan B accurately predicted that the leading cryptocurrency would reach as high as $100,000 per coin. Demonstrating continued optimism and ambition, the former institutional investor now forecasts a target of $532,000 for Bitcoin in the current cycle following the halving. In a recent post, Plan B reflects on Bitcoin's journey, from initial skepticism when purchasing at $400 in 2015 to today's valuation of $40,000, as per the stock-to-flow model predicting $532,000 post the 2024 halving. Plan B invites discussions on predictions for a spot Bitcoin ETF approval, Bitcoin prices after the event, and speculations on the SEC's decision regarding ARK's applications and others on Wednesday. Readers are encouraged to share their thoughts and predictions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.